So in this video, we want to talk about Boeing. They reported earnings last week and reported a loss of more than $6 billion for the quarter. Now, the loss was due to the impact from the labor strike and charges related to commercial and defense programs. This was the worst quarterly loss for the company since the pandemic. However, the company still has a strong backlog. And so if investors are impatient, with prices now near the bottom of this $300 range, one could potentially be handsomely rewarded, but you gotta be patient because the company must restore the 737 MAX to full production and get over any regulatory hurdles. That's first and foremost. Now, this is the monthly chart. Just wanted to draw out this M pattern. It's ugly, yes, but when price broke the trough, that was a buying opportunity on that slight pullback. Now, this is what I'm calling a weekly seller's level, and we'll have to examine that when we go down to the weekly time frame. It was good for one touch, one good for a second touch, and this wick over wick is the candle formation, hopefully, that I'm going to see on the weekly chart, which is a drop, base in candles, and the drop out. On the bottom side of price, although prices did wick through what I'm calling support at $120, that becomes your level where potentially price is going to reverse. That's another $35 below current price. All right, let's go down to the weekly chart. And we saw the M pattern on the monthly chart. This is how it would look reversed. Typically, when prices breach that apex, pulls back, and then moves higher. All right, so we wanted to examine this wick over wick on the monthly. And if I was to touch that zone up, this would be how I would do it. One touch, a second touch. Now, on the bottom side of price, I should draw a marker here. Okay. So this $100 level, again, round hole psychological number, is going to serve as a huge level of support. Once upon a time, this was all-time highs. Eventually broke through. There were a couple of basing candles. Worked once. This was a level on level. So we have strong support, demand, buyers, however you want to look at it, down below. Let's go to the daily chart. Volume above average, but I was interested to see this level here. This is where price turned. Based on that equilibrium, prices pull back 50%. That would have been an opportunity to get long conservatively. You had this rally base rally in price. That zone was good. And this is where price currently sits. So if we look at the price action as part of this W pattern, don't really see any real levels of interest. And so you have to stick to the higher time frame levels. And the charts are saying there's more downside risk. Conservatively, you can't get long until you get candle closes above this downtrend line. I think your next buying opportunity, as the chart is suggesting, is going to be around that $120 level. Thanks for watching. Subscribe. Please like the video.